Hello out there, all to my Facebook friends, clients, followers, and the like. I'm Jonathan Bengal here, coming to you live from my office. And there you go. Thank you, sir. And I am actually here joining you guys from my office. I actually came back to my corporate space. And I just want to let you guys know that Naked Tax Talk, it's a place where we come to bear down to the naked truth about our tax lives, both personally, business-wise, and of course, financially. So I'm actually flying solo today, and I just want to let you guys know that this is an interactive interview. So if you guys got comments, you have some questions that you'd like to ask, now's the time, and I will share whatever information I have about whatever it is that you guys may have questions about. But for the meantime, I'd like to just take this opportunity to let you guys know that I am super excited that I completed yet another week's worth of intense tax strategy training this past week with the American Institute of Certified Tax Coaches. So I'd like to give a shout out to Dominique, the founder of that institution. And I'll tell you, it was really nice to reconnect and to be re-inspired about what it is that we do as tax planners. So as I mentioned earlier, and for some of you that are maybe just now seeing my show, I am a certified tax coach. I'm a certified tax planner, and I'm an IRS enrolled agent. I've been doing this for 18 years, believe it or not. And as a result, I've created a multi-six-figure company. I've created jobs, and I have saved millions of dollars in taxes for my clients year after year. There are some things that I have done for my clients that I'm super excited about, which is the ability to put cash back in their pocket almost literally overnight. And how do we do that? We do that through something called proactive tax planning. Now, you see, most taxpayers do not understand what it means to be proactive in their tax life. Taxes, for many of us, it's always been reactionary, something that we kind of deal with like, I'll get to it. You know, it's kind of like when you have to come home to a spouse or when you have to come home to a relative or whatever, and you kind of just, you love being there, but you don't like being there, so you kind of just put it off. Well, with proactive, it's beyond being reactionary. It's about you working with an expert like ourselves to be in the forefront of your tax life. You know, it's kind of like this. When you take somebody who, for example, works in the financial industry, like certified public planners, certified financial planners, right? They are actually being proactive in your whole entire life, right? They are planning about your retirement. They're even planning your death, right? That is actually part of planning. But what if I shared with you that if you worked with a proactive planner today, you would also realize your savings in real time today, not reactionary, not after the fact, not after something has been committed. You know, it kind of reminds me a little bit about criminal law, for example, and I'm sure my criminal lawyers out there would agree with me. You know, when you commit a crime and you, if you try to represent yourself before the Internal Revenue Service or criminal law, well, I guess it happens there too when you commit something criminally on your tax return. But when you commit a crime, right, the first thing you want to do, of course, as we all have been told by our attorneys, is to remain quiet. In fact, it's part of our Bill of Rights, right? We have the right to remain silent. The reason for that is that it keeps us from saying anything we don't need to be saying, right? Now, if you spilled the beans after you say talk to a police officer or whatever the case may be, and then you go seek out a defense attorney, it's very difficult for that defense attorney to actually defend you because you've already spilt the beans. And in a way, we could say that's reactionary. It's after the fact. It's kind of like with your taxes. In a way, if you just kind of go through deducting whatever you want, writing off whatever you want, not paying attention to your entity structure, not paying attention to how to keep records and stuff like that, it's equivalent to that type of situation. And so what we really want to do is we want to mitigate those damages by essentially being proactive and planning out the future. So in the example of the criminal who commits the crime, he's now going to go seek out the lawyer. And luckily, they've said nothing to the police or anybody else, right? Then they go speak to the lawyer, where the lawyer says, okay, well, share with me what happened in your own words. And so you do. And so the lawyer then can draft a defense for you. In a way, it's kind of being proactive in a way because it's allowing them to actually build out the right outcome for you. Working with proactive tax planners is very similar in the sense that we're looking in the future for the ability to reduce your taxes legally by the same laws that are written that gives Amazon the same ability to pay only 100 and I believe it's $192 million in taxes on over several $billion worth of gross revenue. And not only that though, but Amazon turned around and they actually deferred, meaning they put off 914 million dollars of taxes that it would have otherwise paid to the IRS. It deferred it. Now, let's not be angry with Amazon because there's nothing to be upset with them, right? They are actually following the same rules, the same laws that were written for you and me. You and me as business owners, we are entitled to the same exact strategies, the same deductions, the same write-offs, the same almost everything that Amazon plays with. We get to play with that as entrepreneurs too. You see, tax planning isn't just for the wealthy. It's for all of us entrepreneurs, from the people that are getting up one day and saying, I'm going to start my business, to the people that already are successful in their businesses and they're paying too much in taxes. The reason why they tend to pay more in taxes is because they ultimately fear being caught. They fear being caught with their pants down. They fear this organization called the Internal Revenue Service or your state agency. Ultimately, we as taxpayers, we are totally afraid of being caught because we believe somehow, somewhere deep down inside of us that we've done something wrong. But what if I told you that you didn't do anything wrong? You were just simply doing the best that you could do based on your level of expertise and your knowledge. And let's be real here for a moment. How many of us, when we decided to wake up and start a business, thought about the first thing is the tax bill? Well, some I think would argue and say, well, we did. And so we were actually afraid about what our tax bill is going to be for being successful. And you know what happens? I've seen this with clients, is because they're afraid of being successful, not because of being successful. They're afraid of the money they're about to make and the amount of money that's going to be cut out to the IRS. That's what they're afraid of. Or better yet, they're afraid of claiming a whole bunch of deductions and write-offs, which for the most part they're legally entitled to, and then having the government come back and saying, au contraire, mon ami, you actually owe us more money, and we are going to disallow it. But here's the thing. The IRS actually does not want our money. In fact, the office of, I think it's the accounting administrative offices or something like this, says that Americans, taxpayers, pay over $1 billion a year in taxes to a government that doesn't even want their money if you're an entrepreneur. And here's why. Because the government fundamentally understands that we as business owners need to reinvest in our company. And the way that we do that is by spending it strategically on the areas that we need to in order to make a shit ton of money. Why? Because I don't know about you guys out there, but I know why I became a business owner. It was because I had a dream that I would be able to still make money and still be able to do the things that I really love doing, like being here on my radio show, my TV show with you guys. Or if I want to, quite honestly, hanging out with some friends, kicking back some wine, doing whatever the hell I want to do. But that's what we ultimately want to do. That's what we ultimately strive for. And you would believe me, because the government actually wants us to have that freedom. And as a business owner, it understands that as business owners, we're taking the risk to have that kind of lifestyle. And it rewards us by allowing us to reinvest back into our companies. So here's what I can tell you about proactive tax planners. We are actually in the world of doing several things. The first thing that we are in the world about is about shifting, literally shifting income. That's one, shifting the income. Now, how in the hell do we do this? Well, we do it through something called entity selections. What the hell's that? Well, entities is a fancy word for saying things like LLCs, corporations, S corporations, partnerships. That's what we mean by entity. And by the way, if you're curious about entities, check out my episode on my channel here on YouTube, where you'll find where I talked about sex and entities and how the two correlate. So, needless to say, we're about shifting income legally. That's the beautiful thing. That's what actually Amazon was doing and all these other big corporations out there, because it's not just limited to Amazon. It's the Google of the world. It's StreamYard that I'm using right now. It's Walmart. It's Target. It's your Toyota. It's you name it. These big corporations, right? They are making billions of dollars, some probably trillions of dollars, and their effective tax rate is almost nothing. So they're just simply doing what we're telling you, which is they're shifting income. They're taking one piece of income that they're always being taxed on, and they're moving it into a different pile. Reminds me of a phrase: same shit, different pile. That's all it really is. It's a whole bunch of piles of shit in different places, right? And as we know, out of, well, basically cow poo, for example, roses grow. Well, what's the roses? It's the ability to take the money that I'm saving and reinvesting it back into myself, my business, and ultimately the lives around me. So needless to say, it's about shifting income. The second thing that planners do is we think about how to shift the burden of the expense, to shift it legally, to move it from one shit pile into another one legally. We do this through systematically thinking about which one is going to yield the highest amount of savings for you. That's ultimately what it boils down to. The other thing that government loves to do is gives us these things called secret bonuses. Secret bonuses. There's no secret here, people. You can go look it up. Title 26 of the law, the United States Code, Title 26. That's where income tax comes from. Inside of there, you're going to find bonuses. Bonuses are also called loopholes. You see, when laws are created, they're originally created by a whole bunch of people, right? In Congress, the Senate, the House, and they all kind of come together and they all are finding ways in which to incentivize us as business owners to go out there and to make money. And so they say, if you take road Y, you're going to have all these extra benefits by doing that. And then they're going to put these things called stop measures, right? They're going to put gap measures in there that goes, well, if you take Avenue Y, be aware, because if you turn left or turn right, I don't know if that's working out, but anyways, if you turn any of these directions, you could be in a little bit of a world of a hurt. So it always is putting in these little stopgap measures. Well, what strategists do is we take a look at that and we go, well, I don't think I want to go right anymore. And because I know if I go right, it's going to have a negative tax impact on me. So instead, we go, well, could we build a bridge over what they say we can't do? And then we scour the law, right? We scour all the information out there. And then we find these amazing loopholes. Loopholes, my friends, that can save people millions of dollars in taxes, like Amazon. $914 million of taxes has been deferred to a later time in their tax cycle. 914 million deferred. Why is deferral important? Well, it boils down to this. It's the unknown, right? We don't know what Congress will do during the next election cycle. We don't know. When they get elected, some are going to leave, some are going to be replaced, some are going to be brand new. And they are going to be incentivized by the people that sent them there to implement their own laws as it relates to our income. That's the ultimate truth. So we don't know if they're going to have a cheaper tax rate in a few years or a more expensive tax rate in a few years. But right now, Amazon took the gamble and deferred $914 million in a tax bill that would otherwise go to the government. And I'm telling you guys right now, as business owners, we are entitled to the same types of deferments and also to the same type of deductions that result in immediate tax savings, quite literally overnight. The next thing that we have to also focus on, that strategists focus on, is something called tax exempt income. Now, tax exempt income, many taxpayers are very familiar with some common ones. In fact, if you're watching right now, why don't you tell me some of the things that you know? Now, tax experts, if you're watching the show, no cheating, no cheating. You know, I'm talking about them. I'm asking the other ones out there based on the things that you've heard. What are some tax-free, tax-exempt income line items that you're familiar with? I'll give you a hint. Think about retirement. It's the most common one that we think about. In fact, when you go in to see your accountant at year end and you're a W-2 earner, usually what they ask, or what you ask them, or what I get asked is, how do I limit my taxes? I'm paying so much. If you're a W-2 earner, meaning you're an employee, my hands are kind of tied for the most part. But if we can't come up with another strategy to help you out, then we usually use tax exempt income strategies. For my financial planners out there, you know what I'm hinting at, right? Retirement. We're calling these things like 401k plans, traditional IRAs, Roths, self-employment pension plans, right? These are all, in essence, tax deferral, meaning you'll pay taxes today, you may pay it later, well, depending, I guess. Okay, let me back up. If you are contributing to a 401k, you're deferring. If it's a traditional IRA, you're also deferring, which means you're going to pay those taxes down the road. If you're doing to a Roth, though, you don't get a benefit in the year you contribute, but when you go pull the money out, it comes out tax-free. That's, in essence, tax-exempt income. And those are the basic ones that we know when you're a W-2 earner. But there are other more amazing strategies that we can utilize. Things like, believe it or not, insurance companies, qualified opportunity zones, just to name a few. And even new ones that get created, right? Because this is the thing about strategists. We're always finding legal loopholes. We're always building a bridge over the mines that are put into the law. The next one that we look at proactively are tax credits. Now, let me explain something to us business owners out there, right? I get asked this question all the time. What can I deduct? What can I deduct? I'm looking for more deductions. What can I deduct, right? The thing about deductions is that it is a percentage of your taxes that is reduced. A percentage. So it's not dollar for dollar. It's not a 1-to-1 ratio. Right? 1-to-1. It's not. It's like maybe like a 0.05 to a 1, right? So it's not weighted the same. That's the honest truth. So the next thing we look at are things like tax credits, because tax credits is a dollar for dollar reduction in your tax bill. And let me tell you, girlfriends out there are so many tax credits, it's redonkulous, right? Now, why tax credits are extremely important is because in many ways they are what ultimately incentivizes us to take action faster and quicker. Because we know that a dollar for dollar reduction in my tax bill means that I'm going to pay less taxes come end year. Or if I'm not planning and I'm just being reactionary and I'm opening up my wallet like most of us do, and I just cut a check at random for $10,000 and I send it in as an estimated tax payment, in theory, I have overspent if I'm using tax credits, so I get a refund back. Now, here's the thing about money, if I may take a little diversion. You see, money is what we essentially, as a whole collective, say it's worth. We all believe here that a dollar is worth a dollar. But what it actually buys you is a whole thing that is completely different. And I don't have time to go over economics. But essentially, we all believe that a dollar is a dollar, a euro is a euro, right? A peso is a peso, right? It's every currency has the value that we place upon it. So money essentially is, I forget where I was going with all that jazz. The point about all this stuff is that tax credits are dollar for dollar. There we go, dollar for dollar, right? So the thing about money is this. Today, this marker is worth a marker right here. If I take this marker, though, and I put it, you know what? That's it. Time out. I got to do a money thing. And I'm looking. Okay, this isn't the best example because I actually don't have dollar bills. Like, who carries money these days? Anyway, so I got 10 cents. That 10 cents? Yeah, that's 10 cents right there. Okay, so this 10 cents, we basically have all agreed that this is worth 10 one single pennies, right? So the thing about money is right now in today's time, this 10 cents, actually, I don't even think it can buy me anything now that I think about it. Isn't that kind of sad? But if we back up a few decades, this 10 cents might have bought me a loaf of bread, right? A few decades ago, I could have bought bread. Today, it's equivalent to probably a penny. It's not really worth a whole lot, is it? Now, the thing about it is I have possession of it right now. And if I take this 10 cents and I put it away into a savings account, financial planners are going to love this. When I put this into a savings account or a deferred retirement account, over time, this 10 cents will grow into $1, $100, 100,000, a million, right? Over time. That's why, for example, when you borrow money from your credit card or you take out a mortgage or a car loan or you borrow money from anybody, they attach an interest rate to it. The reason why they attach an interest rate is because that person that gave you their money so you could go buy the car that you wanted essentially said, I could have used that money though, and I could have put it into a savings account, a retirement account. I could have bought my own houses and it would have appreciated. But because I'm taking the risk to lend you the money, I'm going to charge you the interest of time. This is what money does. You see, money is so freaking abstract. It's kind of like the concept of like when you're young and you daydream about your perfect husband or your perfect wife or your perfect family. It's so abstract. It's way out there. It's like an idea. It just floats out there. It isn't until you actually finally get married, until you finally meet the love of your life, that things begin to automatically kind of seem to add up, right? And it now becomes your new reality. So it's kind of like that. Money, believe it or not, is very abstract because we're living in the now with what this 10 cents is worth, which is about a penny, I think, in my opinion, right? By the way, my mom is saying that 1965. Okay, thank you, Mom. Because my mom would have been around that, definitely was around that time. So 10 cents, loaf of bread, 1965, potentially. My point about all this is that when it comes to money, if I give the government $10,000 every quarter, that's every 3 months, because I have no freaking clue, what my future tax bill is, it's equivalent to giving the government, and we hear this all the time, a tax-free, well, it's an interest-free loan, meaning that it doesn't make any money. It just gives it away to the government instead of putting that money into what we call opportunities, like retirement accounts, like reinvesting back into my company, hiring people to do the job for me, right? Reinvesting back in my company to hire the specialists to help me to excel my company to the next level, the coaches, the inventory, that you name it, right? Or taking the money and buying the things I want, like a car, a new house, a new lover. No, just kidding. So the point is that I can take this money and do something with it instead of just giving it away, right? That's reactionary. I don't know what my tax bill is going to be. Believe it or not, we are not alone. Most Americans fundamentally believe that they have no idea what their future tax bill is. They have no clue. And in fact, many taxpayers fundamentally believe, they trust that they're going to get something called a refund at the end of the year. Now, for some of us who are bad savers automatically, that's not a bad deal. I mean, it's interest free. Okay. Over a year, what does the dollar really appreciate? Maybe not a whole lot, right? So, okay, all right, I'll wait. I'll pay extra to get back more at the end of the year. Some people like that methodology. I've been there, done that, right? So that is like, because I'm going to get money back. But the truth of the matter is that your refund is irrelevant. Say what? Yes, getting a refund is actually irrelevant. It's about the total taxes you paid on your income. Again, like Amazon, over several $billion in gross revenue and net revenue, and they only had to pay $192 million, I believe, in 2019, and deferred $914 million So what that tells us is that Amazon took their known tax bill, and instead of overpaying it to the government and waiting for a refund, they reinvested it back into their companies. Which is why we see, which is quite honestly why when we wake up and we think, I need a new, I need a box of condoms, Amazon.com, right? I need to sell my book, Amazon.com, which reminds me, in June, I'm launching the ABCs of Deductions, an entrepreneur's guide to write-offs. And yes, I have a special offer for you while watching my show, just saying. So needless to say, this is what money and how money works, right? So the refund is irrelevant. What we're really looking for is the total taxes that you're paying on your income. That's what really matters. Imagine for a moment if you knew at least quarterly exactly how much your taxes were going to be at the end of the year. Wouldn't that bring you so much relief? Wouldn't that take away the sleepless nights of worrying about that hefty tax bill? Wouldn't that just let you take a deep breath? And more importantly, wouldn't that allow you to be the successful entrepreneur that you are? Wouldn't that allow you to finally charge your value because you know that you're not going to give it away to the government, to a government that doesn't want your money if you're an entrepreneur? They just want you to play inside of the rules. That's it. So last but not least, what strategists work with is something called investments. I finally got there for my planners out there, my certified financial planners. Investments is the last thing that we look at. Well, not the last thing, but it's something that we look at. Investments in the sense of how and when and where to spend our money. How, when, and where to spend our money. Investment. Now, why is that important? Well, the reason is this. I'm incentivized by the government, believe it or not, to get on this show and to talk to you guys. Let's be real and honest. I'm advertising. I have nothing to hide. I have no shame here. I'm literally using this platform to advertise to you, right? Some of you will click on my subscription button, hit subscribe, which I encourage you to do, by the way. And don't forget to hit the alert button so you know when I come on, right? I'm also hoping and knowing that at some point you guys are going to go, I want to be like Amazon, and I don't want to pay that kind of money to the government either. So JB, knock, knock, how do I do this? I know that, right? And so because I'm doing this and because Uncle Sam realizes that this is what I'm doing, he's allowing me to reinvest, to strategically think about where I spend my money. So I reinvest it back into my business. And where do I reinvest it in? Programs like the one I use. So I can come on here and be amazing, right? Like, for example, my signage back here. Uncle Sam knows I have to have a freaking sign. Otherwise, what's the point? He knew I had to have my logo painted up there, right? This is what Uncle Sam knows to be true. And so he wants to reward us. So this is what investments look like. Now, investments can also be things like contributing to a qualified opportunity zone for the majority of us, right? All that simply means is I'm going to go do something special and defer taxes, an investment, grow some money. Or what about if you were to form a captive insurance company? Ooh, another way to create tax-free income, by the way, and another way to invest. Yeah, this is what government is all about for us entrepreneurs. So in essence, being an entrepreneur is a beautiful thing. And working with a proactive tax planner is even more liberating because we specialize in income shifting, expense shifting, loopholes, tax exempt income of all kinds, tax credits of all kinds, and ultimately in investing in you, your company, yourself, and those around you. So with that, I'm going to leave it up to the floor. If anyone's been watching, they'd like to leave a comment, and I will get to business and start answering your questions now that we know a little bit about what a proactive tax planner is really about. So while that goes on, boom, 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 I'm actually going to encourage you guys out there to do this. I wrote a book. I started it. When did I start my book? I actually wrote, so I had the idea in my head about a year ago. And in February in San Diego, I decided that I was going to write a book because, quite honestly, I was being told all the time to write a book. And I already had this book written out based on the common questions I kept getting asked by by everyday business owners like me. And what I realized is that when I went from making my little company, my little firm, JB Financial, tiny little firm, define that as barely being able to make being able to make like $25,000, $30,000 in gross revenue. I realized that I needed to capitalize on all the write-offs and deductions that I was knowing and learning as an IRS enrolled agent and applying it to my company. And once I started applying all these little techniques and strategies, I started seeing my tax bill go down naturally, which then meant it freed up more cash, which meant I could go and reinvest it back into my company. Where did I reinvest it? I reinvested it in coaches. I reinvested it in staff. I reinvested it in technology. I reinvested it in systems. I reinvested it in cool microphones. I reinvested it in cool signage. So I was doing all of that personally. And then I realized something towards the end, which is majority of Americans, when they wake up and they go do business for themselves, they have no clue what they can write off. And in fact, one misnomer that I hear all the time is, I deduct everything. I write off everything. Yep, I write off the dog. I write off the chicken, which I guess you could in certain circumstances, but I digress. You get this whole, I can deduct everything. So I thought, well, how about I can guide some people and make it useful? So interestingly enough, my mother would agree to this when I was a little boy. All I ever wanted to be was a teacher. Like legit, that's all I ever wanted to be. And I can actually remember the time that my mom bought me a whiteboard for Christmas. And I didn't know it was a whiteboard. In fact, it was just this big, huge box that was surrounded by the usual Christmas gifts, which were usually socks and underwear. And when I tore open this huge, huge gift, it was a chalkboard. We're talking like legit green with yellow chalk, like came straight out of a classroom. My poor brother and my poor cousins became my students instantly, and I made them play school with me almost every day, just so that I could be their teacher. And my mother would always say, "You're my little maestro," which is Spanish for teacher. And so as a result of this, I actually grew up with the burning, yearning desire to be a teacher. And so I got my master's degree. I got my bachelor's in accounting, and then I got my master's, taught for 4 years. Enjoyed it, loved it, till I was forced out because of, voila, what you see here, an amazing flaming homo right here. Hello, that's me. And of course, the universe would have me on a very different trajectory. It would have me here in this moment speaking to you guys to deliver this information to you. And so it turns out that I'm really, really good at taking really, really complex concepts and distilling it down into its most basic forms. And so I decided to do this with the common deductions that I see time and time again on tax returns. Either they're deductions that are commonly missed, they're deductions that people are afraid to take, and quite honestly, they're just deductions and write-off that people don't even know that they're entitled to. And truth be told, there is a lot of complexity behind what we do. But I at least wanted to bring it to you guys in the most simplest form. In fact, my editor and publicist, Dee Collins, shout out to you, Dee, told me that the readability is about 7th to 8th grade. That's the highest level. I purposely wrote this book so that you guys could understand it. And why I did that, so for me, the reason why I did it like that, or I wrote it that way, is so that you guys could have the confidence to know what you can deduct, when to deduct it, and then how to deduct it. And the purpose, the reason why the government incentivizes to do it. So what I'm looking for is I'm looking for people who are willing to help me to become part of my launch team. These people are going to commit to me. I'm hoping for your commitment to commit to me to help me to launch my book when I get ready to launch it. We are anticipating that we're going to launch this book in June. We don't know the exact date yet. We're actually narrowing that down. It's in final editing stages. We're also going to very soon, be launching a poll for the cover of the book. And then, of course, we're going to ask for my launch team to help me launch this book. And I'm looking for people to help me launch it. Because here's my goal. I want to impact 1 million entrepreneurs out there, to remove the fear of the unknown, to remove the sleepless nights of the question of what can I deduct? What can I write off? To remove the anxiety and the fights about taxes with their spouses because they simply do not know what they can reinvest and what they can do. That's my goal, is to reach 1 million people to read my book. And it's going to be simple. In fact, I believe we called it an ebook, a paper book, and I believe it's called a pocketbook. And here's how you're going to do it. By becoming part of my team, my launch team, what you need to do first is text 55888 to under the cover, all one word, 555-888, the word under the cover. And there you will actually see a video of me explaining what the next steps are. Then you'll also be introduced to SensorBot, who I've not really talked about a whole lot, but he's a new employee of mine. And you will then also be given updates of when the launch date will be and the next steps that happen in this process. I'm new to book publishing, by the way. And let me tell you, there's so much that goes into it. It's ridiculous. But here's what I know. I know I'm a tax genius. I'd rather be buried my books in tax law and understanding cases and coming up with creative ways for people to save money, not in publishing my book. So I actually invested my money, which the government rewards you for doing, and I gave it to another company instead for them to help publish this book for me on my behalf. This is what I've done. So when you text 555-888 under the cover, all one word, you'll be added to our mailing list, to our text list. And when the launch happens, we're going to let you know with all the steps you're going to have to do. And in exchange for you giving, for you helping and supporting me, you're going to have access to the book before anybody else does. And this is really important because if you're a business owner, living here in the United States especially, and you're a business owner, and you get your hands on this book, the ABCs of deductions, you're going to actually be able to take the deductions that I list, A through Z, and the reasons why they are the way they are. You're going to be able to apply those same deductions to your business so long as you meet the requirements by asking some questions that I actually give you in the book. Wouldn't that be an amazing thing to have? To have the book ready to go. You have first access to it, all these amazing tips and deductions. And ultimately, what this means for you is that you can actually start implementing it overnight. And as a result, you're going to start saving thousands of dollars, hundreds of dollars, depends how you implement it, overnight on your tax bill. The only missing component, of course, is knowing what your tax bill would be. And in which case, hooking up with a planner is probably a really good option for you. So that's what I'm looking for. I'm looking for people to be part of my launch program, texting 555-888 to the word under the cover to get access to the first. You'll get access to my book, The ABCs of Deductions, and all I ask in return is your commitment to help me launch my book in June. So I'm super, super duper excited. And then the other thing I would like to share with you guys is starting next week, I'm going to have a new series. So it's still going to be the Naked Tax Talk Raw, except that I'm going to walk us through the journey of the Camino de Santiago. In 2013, my husband and I set out on a journey that I never knew at that time how massive an impact it would make on me. I started out as a consumerist, as a tourist, and I ended that journey 900 kilometers later, 560 miles later, 35 days back to back later. We ended as pilgrims. And so I'm going to, over a period of weeks, share with you the dynamic story of our journey on the Camino de Santiago. And I'm going to tie it back to our real life. I'm going to tie it back to our business life. And I'm going to tie it back to our taxes. So that's what I'm going to do over the next series of the next few weeks. And so I hope that you tune in to hear about this amazing journey. And I'm also going to reach out to the people that were part of our group and have them on as guests as we retell the story of the Camino de Santiago. And it turns out, just for a little hint, we actually have 4 characters. They are the complainer, the knitter, the duchess, and the happy one, or also known as the saint. And we'll talk about each one of these characters and how we became each one of these, and again, how it transformed our lives. So with that, I don't see any more comments coming through. So with that, I'm going to tune out, zone out, and go do the things that I love to do, which is to play my video games, because that's what I'm all hot and bothered about right now is a new game I'm playing, for the record, Watch Dogs 2 on my PlayStation 4. So that's what I'm going to go do. And until then, I want you guys to know that I truly believe that as entrepreneurs, we have every right to claim the same deductions, the same write-offs, and to utilize the same strategies that Amazon utilizes too, and deferred $914 million in 2019 and only paid $162 million in taxes on their billions of dollars they earned. Let's be like them. Let's be like Amazon. Let's make our millions and pay thousands. By the way, if you'd like to know more, let's get naked at nakedtaxtalk.com. Until then, I'll see you guys next week when we start part 1 of the Camino de Santiago.